Do you want to understand the secrets of Goldbach Stacked Dealing Ranges? So in my previous Goldbach video, I introduced Stacked Dealing Ranges. In this video, I'm going to show you a real world example on how you can explore this for your own trading. So this is US 500, which is the CFD, the spot contract for S&P 500, which is ES. So let me remove this markup for you. So what is the premise of stacked dealing ranges? The premise is once you know which power of 3 the algorithm is running on, you can then find the fractalized dealing ranges. You have the lower power of 3 dealing range, the equilibrium, and also the premium fractalized dealing range. However, you can use the stacked dealing ranges in order to find trades with more aggressive risk to reward ratios. So let me show you using this example right here. So on the higher time frame, we know that ES is running on the 729 power of 3. So algorithms will run through this. Now, what sparks a Goldbach algorithm? As I've shown you many times before, a stop run into the low of the dealing ranges is what sets it up, because you have all of these sell stops, which were first engineered, being taken out into the low of the dealing range and price takes off. But what you must understand is just because the higher algorithm is running on the 729 doesn't mean you cannot take advantage of the stacked dealing ranges. So to explain this to you carefully, we are currently running the 729. This is the low, this is equilibrium, this is the high. Within the 729, you have 3 243 Goldbach dealing ranges. You have the equilibrium dealing range. This is where you do not want to enter trades if possible. You have the discount dealing range. This is where you want to get those higher probability swing trades. And you have the premium. This is where you want to close out your long trades and potentially get into short trades. But how do you trade the stack dealing range? So if we go back to the 729, you can use a custom fib, which I call the thirds fib. All it does is it breaks down any dealing range, I'll show you the settings, into the discount of the range between 0 and 33%, the equilibrium 33 to 66, and 66 to 100% of the dealing range. So you know that there's a 243 here, a 243 here, and a 243 here. Once you understand that a stacked dealing range is the sum of the fractalized lower dealing ranges, you can then run your IPDAfib. So let me remove the thirds fib and swap it for the IPDAfib. I will also remove the extensions. If you want to know about the extensions, I have plenty of Goldbach explained videos where we talk about the extensions. Take a screenshot of this if you don't understand what the IPDAfib is, but essentially it tells you where the high probability premium discount arrays will form. Low, rejection block, order block, fair value gap, and so forth. So now you have your stacked dealing range, which is 2 243s on top of each other. You can then start trading the algos. So algo 2 is something that I teach publicly. It goes from the rejection block, typically to the breaker block, but we can just say anywhere above the fair value gap level. It retraces to the fair value gap, and then it terminates at the opposing order block. So the first thing you need to do is check if there's a fair value gap in the fair value gap Goldbach partition. I'll mark them out for you. The rejection block is here. This would be the order block. You would have the fair value gap partition here. And this is where you would take your entry. So we have an order block. In the order block partition, you have your fair value gap. In the fair value gap partition, you've got to wait to exit the fair value gap partition. And then that's when you can tap in. You have your stop loss at the low, and you can TP at the opposing order block level, which we are just about to hit. Oh, we've hit it now. Great. So we would have come in here and we would have just TP'd. Fantastic. rejection block, retrace to the fair value gap. Now, in terms of partials, it's wise to take some off at EQ because we want to buy in a discount, sell in a premium. You see how it shot through EQ, sell in a premium. So you want to take some off here. You want to take some off where the opposing order block, where the bearish order block would be forming. And if you want to leave a runner, it would get you to the high. Okay. If you would like to learn more about Goldbach, there are plenty of videos on my YouTube channel. There are explainers. There are explainers of the indicator. I go through various algorithms. If you would like to learn how I trade time and price using my golden bullet trading strategy, which I use for index futures, forex, crypto, metals, and energies, there's a link to my mentorship below.